Stephen's CNBC contributor. Thank you so much, Sarge, for taking the time to join us and talk to the F.A.C.E community. I'm going to make you a panelist now. Should be able to hear your voice in a second. And then I want to show my screen. Are you there, Steve?
Can you hear me now?
I can, Sarge.
Outstanding.
How are you, buddy?
How you doing?
You know, I worked on you a long time, didn't I, to get you to come in here?
You sure did. That's for sure. You're persistent, if anything, which is a testament to your survival in the business.
Yeah, survival it is, Steve. So talking about survival, I'm interested in if there's really still an edge being on the floor of the NYSE as there was compared to the old days of open outcry. Is there any advantage to being on the floor? Because the last time I went back to Chicago to the Merck Board of Trade, they combined, to me it looked like a bowling alley except for the options pit. So what do you see when you're down there to give you some insight? Well,
to be honest, there isn't the advantage there once was. I mean, I think that's obvious and plain for all to see. The exchange has contracted from 6 rooms at its height down to 1 room. And between the New York and the American, the manpower requirement down there has gone from about 7,500 down to less than 500. So, yeah, like our counterparts in Chicago, there are times when there is value added on the floor. There's no doubt about it. I'm not going to diss my floor broker colleagues down there, but the best part of the advantage is confined to the trades that can be negotiated or the trades that still rely on the old auction process, which even if it's electronic in nature, is more relevant around the open and the closing price, because those are trades that actually time stops and supply and demand are evaluated by, let's say, a specialist for one larger trade than during the day where most people's orders are, most funds orders are chopped up into very small slices and try to beat the high frequency guys all day long.
Okay, so Sarge, why don't you tell us a little bit about your journey, how you ended up on the floor of the NYSE? Are you originally from New York, and how did you originally get involved in the business? How did you get from there to where you are now?
Oh my gosh, my journey is bizarre.
Great.
Well, I joined the Marine Corps out of high school.
Okay.
I got to Wall Street a couple of years later through a friend of my father, because it was very hard to crack any walls down there without knowing somebody, and in a roundabout way I did. So I spent a few years getting lunches for people and writing up floor tickets, because I wasn't qualified to take orders over the phone yet. So I actually just
you were too young?
I just didn't have any experience, and in those days, if you've been in the business, you know things were a lot rougher than they are now. I mean, if you made one mistake, you were out the door pretty quick. So they used to shield us young guys.
A lot more elbows thrown around too. But
that's for sure.
Yeah,
that's for sure. By 1987, I was a frontline, what we used to call clerk, which now they call trading assistants, and I was there for the crash of '87. That was probably the craziest time that I've ever spent in auction market crowds. And with a close second being the first day we came back after 9/11. But over the years, I spent the majority of my time with Credit Suisse, where I was involved in all sorts of things, from block trading to, I was always on the floor, but block trading to investment banking to you name it. From there, once Credit Suisse decided to downsize, because they eventually laid off every single person they had on the floor, they no longer have representation down there. That's the old First Boston, if anybody's older than 50 down there. I moved on to Meridian Equity Partners, where I became their U.S. Economist. And I eventually moved on to Deep Value, to Stuart Frankel. And I spent a year driving a forklift when I was out of work. People don't know that. And I'm no longer on the floor. I'm running my own operation. I'm still on the floor from time to time, but I don't spend all of my time down there because it's no longer necessary for me to do so. So you'll see me on the floor tomorrow if you watch Fox Business, but today I'm working from my office.
You're all over the place, CNBC, Fox, everywhere. Obviously, the content and your presence on camera attracts viewers, and I always love your commentary, and I really recommend anyone that's hearing us get a hold of Sarge to get his daily emails that kind of give the highlights in a very quick few sentences of what you should be paying attention to if you're just, having your first
my
cup
notes,
of
if
coffee.
I can plug my notes, they're published at thestreet.com these days, courtesy of
Right.
Jim, where I also
Okay.
manage the stocks under 10 portfolio for.
Yeah, I was thinking about that. I hope that you're never talking about the FANGs in that group.
No, they're not in that group, but I talk about whatever I want to.
Well, I hope they never are, is my point. Stocks under 10. What a world that would be. So, you seem to have a holistic approach to the market. You're at times your stocks specific, but seems like you'll break things down a lot in different asset classes. And, I've heard you talk about everything from, crude oil to the Fed to gold, bonds, you try and have a balanced type of portfolio. What I like most of what you talk to people about through your writings is we're all going to be wrong, and we're all going to take losses in the market. And you tell people to get back up on their feet, to dust themselves off and, not dwell. It's part of the game. So how do you manage risk, Steve? What's your best method for, and also your style of not going all in on a trade? I caught an interview you did on CNBC where it may have been a big down day in Amazon or something, and you said, I bought it and I hope it goes lower. So has scale in trading, is that a big part of how you position yourself, and how do you manage risk?
Oh, certainly. I mean, I'll probably never initiate a position with any more than 20% of my intended position, because
Okay.
you're almost always wrong at some point when you enter. And it likewise, when I hit a price target, I never get all out when I hit a price target, because why should I sell myself short? So I trade in increments of 20% of my intended position. That's how I've always gone about it. I usually hedge myself through the options market if the opportunity presents, or if the value is there in terms of premium. The funny thing is, I'm on your show, and probably the only thing I've never traded is Forex.
Okay. All right. Well, I bet you do pay attention to dollar movements, even though you don't trade it, don't you?
Oh, of course. I mean that's the whole reason why the earnings for the multinationals have performed so well over the last half year or so. Right. I mean, if it wasn't for dollar valuations, we wouldn't see this move in the Dow Jones or for the top half of the S&P 500 for that matter.
Right, and that's why the Russell's been lagging, right? Russell does better with a strong dollar.
Oh, indeed. Small caps don't do well in this environment, and small caps are also suffering from the potential or lack of potential for tax reform, because small caps pay a much higher effective tax rate than do the larger international firms. They're paying close to the 35%. So if relief isn't coming for them, well, that's why they're going to be performing so poorly. Likewise, if we see momentum from the legislature, which I know might be a long call at this point, this is where you're going to see your gains towards the later half of the year, if it looks like tax reform might actually occur in early 2018.
Sarge, I know a lot of people have been brought to the trading cemetery for trying to predict or short this market. You've been around a long time. You've seen many corrections. Do you think the action we're having in VIX this week, and if we get a close over 14 or so in the VIX, that we could finally get what used to be normal, like a 10% correction in the market? Do you think we're in that time window? Seasonally, this is a period where there can be vulnerabilities into the fall. Isn't that true?
Sure. I don't know how much of a predictor the VIX is anymore, but we certainly face some possible headwinds, the most immediate being North Korea. I mean, if something stupid happens with North Korea, well, you're going to see a 25% correction this week. I mean, but more realistically, maybe not more realistically, but let's try to stay out of such gigantic geopolitical risk. If we do that, then the next real bump in the road is Mario Draghi's speech at Jackson Hole. If he plays a dovish central banker, well, that changes the dollar's trajectory for the short term.
Right. Do you think that we have shifted? You do pay attention to the dollar. We were in a big bull market and the dollar peaked at 104. Our president wanted a weaker dollar so we'd have more of an export edge. And like you said, it's paying off for multinationals. Do you think this is a major trend change in the dollar or just a pause to refresh before the bull market and the dollar resumes?
No, I think this is a change in specie. I don't know if we go all the way back to the 80 level, but if Super Mario is forced to tighten monetary accommodation over in Europe,
okay,
then yeah, you're going to see a weaker Dixie eventually, even no matter what he says at Jackson Hole. And I know you guys don't trade the Dixie, you kind of scoff at it because it's a tool that you guys use to.
I like the Dixie.
Oh,
I mean, it's 60% euro anyway. They're almost the same chart,
But,
Go ahead.
But I hear from a lot of currency traders that they laugh when I use the Dixie to measure my financial universe. So
yeah, well, they ought to let go of their ego, and ego stands for edging God out. So it's a nice contract. I think that if you trade Swiss or yen or euro, if you don't pay attention to the dollar index, it's like trading IBM without following the Dow. It's like trading Intel without looking at the NASDAQ. That's my view. You have to look at the basket first, right? And then break it down.
Oh, certainly. I think so. I mean, I like to, as you know, trading groups. When I go into a sector, I like to have 3 names in the sector that I'm playing, usually in the same direction for the sector. And that's dependent on many things, from the macro to the currency to sentiment. Sentiment's always a big deal, and it's much tougher to gauge. So you kind of have to.
What do you use, Sarge? Nowadays, a lot of people used to use COT. Now there's DSI that we use. What do you use to gauge sentiment in different instruments?
Well, I use the surveys. I use the consumer surveys, the manufacturing surveys, and I get out and talk to people as much as I can. I cross the moat. Unlike our central bankers, I will go to a Walmart, which I'm long, by the way, and I will ask the people that work there what they think. I'll go to Home Depot, which I'm also long, and I'll ask the people there what they think, what they're seeing, what's selling. Are they see how are prices moving on certain items that I'm not familiar with? And you have to be a real social person. And I know, being on Long Island most of the time, it's not representative of the entire nation, but it does give me something of a sense. I'll walk around the mall. I'll try to study transactions. I'll try to study how people in Victoria's Secret are parting with their money or not parting with their money, how content the staff seems in certain places, whether they seem like they're worried about their jobs or whether they seem like they enjoy their jobs. So
wow, are you old school, Sarge?
Oh, it's legwork. I measure parking lots. I go to Chipotle Mexican Grill and I'll count the people online. And I'll count how many empty spots are in the parking lot. I mean, that's part of the job if you want to make money.
Hey, I have a new handle for you.
Oh, yeah?
Yeah, gumshoe analyst. What do you think? Gumshoe analyst for Sarge. I got the bell on that one. So let's move to a few other asset classes that I know you follow. A view on bonds in the Fed, Sarge. Where's your head at? We've rallied, since the election. We're at around 2.25 10-year. Do you think we're ever going to break out over that 235, 236? Oh, 265 is kind of the line in the sand for a lot of bond bulls, bond bears. Which way we go in there? And is the Fed close to being done?
The Fed, well, I think balance sheet management is basically written in stone. That's going to happen. They have some kind of mandate from above where they have to address this now. I don't know where it came from, but it seems like they're immovable on that. What's in play is the December rate hike. All right, just probability for such a hike went over 50%. I do think the jobs report last week was rather strong. I do like the way international trade is going. Factory orders have been better. The ISM has been better. Small business optimism is better. We just saw this morning that productivity actually beat unit labor costs for the first time in ages last quarter. So there are parts of the macro that are improving. I know I like to be kind of negative on the Fed and negative on the economy, and people expect that from me, but I am seeing signs that it's actually getting better this time. Unlike the smoke and mirrors we've seen for the last 8 years, things do seem to be suddenly getting a little bit better. Let's see what consumer
global, and it's global too. It's almost synchronized with the rest of the world this time, isn't it?
Oh, it's actually, we're behind the curve. It's actually they're actually a little bit ahead of us on the improvement, which is also helping our multinational firms reach this 11% or so increase in earnings that we're seeing for the quarter.
Okay, oil was a big driver last year. You know, the world was coming to an end at $25 oil, and all the MLPs and high yield debt was under pressure. And once we got that low in oil, really that was a green light for the rest of the market. Oil shares have dramatically underperformed most sectors over the last, say, 8 months. Where do you stand on oil? Do you think $60 is possible? There's still a lot of bears that think we could go back and retest those lows at 25. That would make the Middle East even more of a mess, don't you think?
I think oil's tough. It's an area where I've taken it in the mush this year, to be honest with you. It's a drag on my P&L. I'm still long a couple of names that I consider to be quality, like Schlumberger and Apache, although Apache missed earnings badly this quarter. I'm not going to give up on oil just yet. We just saw resistance here in the low 50s. I think we need to hit 53 and get past that to get to 60, because oil trying to trades in windows that open and close. If we go down, if we take a hit here, depending on what OPEC does and depending on our rig counts, a 44 handle would not surprise me much. I'm not going to puke these positions at lousy prices. They both pay decent dividends, and I do run a dividend book, so I can move them from my energy book to my dividend book and not have to face the hickey that I've forced upon myself in the space. But that's, you spoke about that earlier. That's taking the good with the bad. That's understanding that if you're going to get a couple of punches in, you're probably going to get hit with one or two also.
You know, we've talked about a lot of different asset groups. I find you also a little bit different. That I know a lot of stock guys, quote unquote stock guys. They won't even pay attention to precious metals, and I know that you at times participated in any view or positions. Really came to life last night. We've been in a gradual uptrend in both gold and silver the last couple of years. Any views on it?
Well, I currently recommend a 7.5% portfolio allocation towards gold. I've been as low as 5% and as high, and I've never been higher than 10% on what I recommend. And I think 7.5% is kind of about where I've decided is a compromise. I do think you need it in your portfolio. I think something like this proves it. I think it's up $11 today. I haven't looked in the last few minutes, and it's not on my screen right now. But like I said, if something stupid happens with North Korea, you're going to see a spike in this that will probably spin your head just the same way that your equity portfolio will hurt you in the other direction.
Do you prefer gold itself through the ETF or participating in the miners? And I was always taught that the mining shares lead the way for the underlying commodity. Have you noticed that phenomena?
A lot of them are laden with debt, and it's really hard to know which ones are the right way to go. I will trade the ETF just as an instrument of trade. I don't prefer ETFs. I don't really like ETFs all that much. As far as the 7.5% in your portfolio, if you actually follow what I say to the T, I would prefer to have that in physical gold somewhere that you can go to in the event of the day that you need clean water and ammunition.
And speaking of ammunition, Sarge, I know you talked about joining the Marines as a young man. You're still active in the reserves, aren't you?
Actually, I got out last April, about a year and a half ago. My contract ran up, but I was in the National Guard at the very end. So I've served in a component of the Marine Corps and a component of the Army.
And I also know that there's a spirituality side to you, Sarge. You know, you and I have exchanged a few emails in the past. How does that help you, and how do you go between the two worlds of being a trader out there for mana and keeping an eye on the bigger picture where, you know, we're all trying to grow our accounts, but we're also taught to lay up treasure in heaven. Has that helped you as a trader, having a strong spiritual background?
Immensely. It's helped me in everything I've done in life. I'm a practicing Catholic for those who care to know. And I think if you are faithful in almost any organized religion, it's a coping mechanism. It doesn't have to be religion, I guess, but it helps you, let's say, allay your stress. It helps you realize when you do screw up that you're supposed to screw up sometimes, and you're going to get past this. And losing money is not even close to the worst thing. All you got to do is travel to New York City in the subway system and take a look at some of the poor people around you. I mean, it does drive you to care for these people. It does drive you to try to reach out, to not give them money, but to bring them socks and to bring them food, things that you think they need, things that you notice they need.
Sarge, thanks so much for being with us today. You're one of the real people out there. I really appreciate you have great insights on the market and your character, and I'm a fan of Sarge 786. That's where you could find
986.
986. Yeah, okay. Sarge 986. Thanks for the correction.
That was my badge number on the trading floor. That's why that's.
Oh, okay, Sarge. And really a pleasure speaking to you. I hope that your portfolio blooms and you reap a great harvest this fall. And it's great to know you. And thank you so much for coming in here and finally relenting to be my guest here for an interview.
The pleasure was all mine. Thank you for having me, Dale.
All right, you are one of my trading warrior brothers. Everyone, thanks, Sarge. And F.A.C.E, have a great day, good hunting, and we'll see everyone tomorrow. Thanks again, Sarge.
Take care.